Charlie Brady. Nice to meet you and of BitFufu. Glad to have you on here, man.
Well, thanks. Yeah, it's thanks for the invite and good to meet you guys as well.
We're in the middle of all kinds of transition stuff ourselves, and you guys have actually been around for a while. But I honestly did not. I did not know a ton about you guys, and it's kind of interesting to get you on here now. To really kind of tell your story and who Bit Fufu is and what you guys are doing and where you're wanting to go. Um, I want to know the story because I honestly, for as big as you guys are, um, I I've heard your name around, but I didn't know anybody at your company, and I haven't really had any type of interaction deal wise with anybody from BitFufu. So yeah, man, you mind kind of giving us the BitFufu background and just yeah, where'd you guys come from? How'd you get started and where you want to go?
Yeah, sure. So the company was founded in 2020, late 2020, and went public almost a little over a year ago, March 2024. It was a D-SPAC, so it came public on March 1st of 2024. So public just over a year. And the history of the company has been kind of an asset-light strategy. That's how it was built. It was we leased all the capacity, we leased the majority of our mining rigs, and that's and the company's been profitable and a positive EBITDA growth, positive revenue growth, positive net income growth every year it's been in existence. So we've never when it's not a money losing operation, we actually do pretty well in profitability, and that asset light strategy helped get us to that point. Back in in late third quarter of 24, we started to pivot that and realize we need to own some data centers. Number one, to kind of control our own destiny on where the capacity is coming from. Number two, to lower our cost basis, which we've done on the electricity cost. And a third point is to have some optionality down the road if we ever want to go into HPC AI. We're not in there right now, but it's certainly something we're looking at. And as are I think all the miners these days, and some are more far along the line than we are. But we want to make sure we have the data centers in place that if we want to pivot harder into that we can do that.
So when you say asset light, were you guys just getting hosted or what is that? How would you describe it?
Yeah, so we leased capacity from various hosting centers.
Oh, okay, okay. It's like I mean, you're getting a markup on the power basically. You're paying a lease fee or whatever it may be, right? And
Right,
I mean, what?
exactly.
Yeah. So what kind of rates? Because the hosting model to me right now is going because hash price is so low, honestly, and power prices I think are probably over time just going to continue to go up. But is that part of the strategy transition? I guess that you guys are looking at right now.
Yeah, when we were 100% hosting capacity, our costs were, I think they started out around 7.5 cents, and we kind of
Hmm.
through negotiating contracts and reallocating some out of the U.S. into other low cost areas such as Ethiopia, we kind of brought that down to closer to a little under 7 cents. And then as we acquired these facility in Ethiopia, the Oklahoma site, and two U.S. sites in the U.S. we have a long-term lease with option to buy. We're pulling that electricity cost on an all-in basis for the entire fleet, which obviously bakes in some of that hosted network to just over 6 cents a kilowatt hour on an all-in basis. But if you look at the ones we own, Ethiopia is 3.2 cents a kilowatt hour.
Dang,
Oklahoma is 3 cents a kilowatt hour. Yeah,
three.
Our cost to mine Bitcoin in the Oklahoma facility is $18,000 before
Oh
DNA.
my gosh, dude, that's great.
Yeah, and the other two, the US facilities that we have a long-term lease on, I think 4.2 cents on those 2.
Nice, nice.
So,
Locked
we
in
obviously.
4.2.
Yeah, yeah,
Wow. Okay, that's
it's
great, man. Yeah,
so
that's
that's
actually. I mean, that 3 cent. Is that an SPP in Oklahoma?
yeah, there's a contract in place for that longer term contract
Hmm.
to do that, so
Okay.
that's how we
Okay.
get it down to there, yeah. But we've
Yeah. No,
also,
that's great.
we've recently put some of the upgraded the miners in there. So we put
Hmm.
some XP21s. We energized some of those in March, and so that helped the overall efficiency of the facility itself. But from an electricity cost standpoint, yeah, that rate's kind of locked in for a while.
Do you guys
Man,
have the
that's
2
great.
sites? Is it Ethiopia and Oklahoma?
Those are the two, yeah, they're joint ventures. We own the majority of those joint ventures, and then we have two sites, other sites in the U.S. that are on long-term leases. I think they're 10-year leases with option to purchase. So
Nice.
we effectively control about 164 megawatts total out of the 566 that we have right now as of end of April. We
And
just
is the
had our
goal to
April April operation report came out today, so that's the latest data.
so is the goal to control more of the existing assets you guys have with this kind of vertical integration strategy, or is it just to acquire more sites and then that becomes a larger portion over time?
Yeah, I think what we want to do is we want to initially, I think, probably acquire brownfield sites. Stuff that's in existing operations today that has good power contracts to it, is attractive power. At some point down the road, we probably look at greenfield sites. I mean, there are greenfield sites that are in sort of that pipeline that we're looking at, which is about 800 megawatts today. The potential deals that we're looking at over the next couple of years. And so there's some greenfield in that. I think you could see us do that, but it really matters. You don't know exactly the timing on when these things are going to drop in, right? So
Right.
it could be a greenfield in 3 months, or it could be a greenfield in 18 months. It's hard to say how those fall out.
Right, man. I was literally going to say that the problem with the greenfields is the unpredictability of when the power is going to actually get there. So yeah, and the problem too that I'm finding anyway is just there's a very limited amount of scalable power that is ready to go and is actually for sale right now. It's tough to find them. I know you guys got a pretty good pipeline, it sounds like, but yeah, there's probably a lot of competition for that stuff. So it's gonna be interesting over the next few years with the AI stuff coming in to what are miners going to be taking down versus when they're dealing with competition from the AI world as well when it comes to some of the large scale stuff. So I don't know.
Yeah,
What do you think on that? What's the path to the kind of co-lifestyles of the AI in the Bitcoin world?
Yeah, I mean, it's interesting to see how that plays out. I think, there's potential that you have, if you're looking at some of the AI HPC centers and they want 100 megawatt plus data centers, and if you're pivoting in that way and you've got an 80 megawatt data center and and you're looking at having 100 minimum, what do you do with the 80 megawatt? Do you sell it off
Mhm.
to someone like BitFufu or someone else? So there's, I think there's some potential of that happening as well. And we've also seen, we've seen some independent miners that were, post halving, they're not making as nearly as much money or any money. And we've seen folks come to us and say, look, I want to, I've done this for a while. I'm going to get out because I don't want to put the money into refleet my
Mhm.
network. And so they just kind of get out of it. And interestingly enough is that those customers sometimes become cloud mining customers to us because they love Bitcoin. They've been doing it for a while. It's something they don't want to just walk away from completely. And so we do have some folks that have just gotten out of mining, self mining themselves, and kind of gotten into doing the cloud mining. So they're still kind of involved in some part.
So talk to us about this cloud mining. It's different from hosting. Can you walk us through that? Because I talking
Yeah.
with Tony, one of the guys on your team, he said that that is actually the largest part of y'all's business.
It is. Yeah, I think if you look at the first 9 months of 2024, it was about 63%. It was about that for 2023. For in the fourth quarter, we had some machine sales that kind of skewed that a little bit. So it as a percent of overall revenue, it dropped down, but it was still over 50% of our revenues for 2024. And what that is, we have our hash rate, right? It's 28.3 exahash as of end of April. And we have the ability to allocate that hash rate either self mining or cloud mining. And we can move that dynamically back and forth. And we do that based on a number of different factors, hash rate, Bitcoin price, and some other stuff. And what we're doing with the stuff on the cloud side is we're effectively leasing out that hash rate to customers, retail, it's
Oh,
institutional customers. So the majority of that revenue is actually institutional money. In terms of number of users, there's 607,000 registered users that have gone through the KYC process and are on the in the cloud system. But from a dollar perspective, it's really institutional. So you go in there and you pay a cost per terahash per day, and the contract sizes are sliced into generally 30-day chunks. So 30, 60, 90, 180, 360 days, and you pick a time period you want to do, and you pick how much exahash you want to buy. Um, and you start mining. Assuming you've gone through the KYC process first.
So you're just mining for them, but is it a way for you guys to, like, hedge? Is that the way you look at it?
We do. It's kind of a financial tool for us as well because when
Mhm.
we're selling that hash rate, we get paid for the hash rate up front at the start of the contract, and that's locked in for the life of the contract.
Right.
So we're selling it, we're locking that cost, that revenue in for right there, and you know, uh, so that's kind of smooths out some of that volatility on the revenue stream relative to a pure
Mhm.
self miner, and it just allows us to really, as we go through different up and downs in the markets, to kind of reduce that volatility,
Mhm.
and kind of optimize the entire network as to what we wanted, how we
Yeah.
want to do it.
So do
So you
you
said it's
guys,
mostly
like
institutional capital. Walk us through what kind of institutions are wanting access to mining right now?
Now there's family offices, there's some high
Okay.
net worth in there. There's some smaller institutional. Right, and essentially right now, I should point out too. So this cloud mining business, and we've seen just phenomenal growth out of that business over the past 2 or 3 years. That's without we don't sell into the U.S. market currently. It's something that we're actively and aggressively looking at doing. And I think you probably will see us do that down the road. But all of that growth in cloud mining has come without even tapping into the U.S. market yet. And so
wow, really?
that's yet to come. And so, family offices, small institutional money managers, um, that's the institutional money. There are some corporates that we have that are from a treasury management perspective, want to own Bitcoin, but don't want to obviously go buy rigs and have to go through
Right.
the complexity of doing that. So they're getting involved doing on the cloud mining side, and we
Yeah.
guarantee 95% uptime, right, which is pretty high for
Yeah.
the industry. And we can do that because we have this fleet. We're on 5 continents. We're over 30 sites globally, and we can move that hash rate around. So let's say we had an entire
Right.
data center go down, for instance, which has never happened. But let's say that happened. We would do is slide hash rate that we're using for self mining and slide it over to cloud. And so from a customer's perspective, you're not going to see that blip, right? We actually
Right.
run closer to 98% uptime, 99% uptime, but we guarantee 95 on the cloud side.
Man, that is I don't know why I haven't we have not talked about that on this show once. That I like that a
It's
lot.
it's uh, it's unique, it's different,
Yeah.
I do get the question, why would you do cloud mining instead of just going buy on an exchange, right?
Mhm.
And the shorter answer is we've studied it and looked at it on over time series, and um, it obviously varies across the cycle, but we found that cloud mining will yield more Bitcoin than if you just bought an exchange, and that it has ranged from anywhere from 2% more over, say, a 30-day period to up to 20%, which is obviously
Mhm.
a pretty high extreme. That's not the average, obviously. And what it also allows customers, if you're thinking, you want a dollar average cost of
Right.
Bitcoin,
Yep.
because people say, well, what if Bitcoin goes down and am I going to lose money in the cloud mining? Well, I mean, if you buy an exchange and it goes down, it's the same thing. If you think
Right.
Bitcoin's going to be 150 or 200,000, and you're cloud mining it when it's 95, 100,000, I mean, that's if that's your view, then you probably end up okay on it.
Mhm. No, I like that. It makes a lot of sense, and yeah, it's like DCAing through the hash rate. So, that's pretty interesting. That's very interesting, and I got my wheels turning right now thinking about how we could try to take advantage of that with some of the small sites we got. But the decentralization of your guys' asset makes a big difference on that. So,
It does, yeah.
yeah, that's great, man. That is great. So, you seem to be, like myself, a more experienced individual. There's another way of just saying older. So how did you get
Come on.
into I know, not old, I didn't say old, older. These guys are
Yeah,
all like
fair enough.
15 years old that we deal with, man. So,
Yeah,
us 35-year-olds here,
I wish.
what's your story? Like, how did you get into Bitcoin? And
Yeah, I
what's your
spent most of
background?
Yeah, I spent most of my career on Wall Street, sell side equity research. Did that for 18 or so years, maybe 20 actually, if I think about it, when I really started. And about 5 years or so, decided to pivot out of sell side equity research and get into investor relations. And so I did that and worked for a couple of companies, and I was working for a tech telecom company here in Atlanta, and got a call from a recruiter out of Singapore, which is where BitFufu is headquartered. and they were looking for someone who had Wall Street experience and understood the capital markets and understood IR and investors in the
Mhm.
U.S. And globally. So interesting, guys. So I took a look at it. Bitcoin is, and it's from a personal side. I've kind of been, personally invested in a small way for a few years, but opportunity to kind of get right into the thick of it was interesting. So here I am.
Yeah. No, we've all had, our own individual journeys, but, I think, I don't know, it's like, I always like hearing what the backgrounds are, and coming from the Wall Street background, I'm depending on what year you got into it, I'm sure you deal with a lot of people questioning what you're doing, but it's with the change in administration, obviously, the Trump administration very supportive of Bitcoin, which is actually different than how he was, his first term. He was not a
Yeah.
proponent of Bitcoin. So, have you guys felt from an investor standpoint, have you seen or felt a more excited, I guess, investor base with the administration change? And I don't know, have you seen any change since the election of last year from an enthusiasm about BitFufu or just Bitcoin in general, being the investor relations guy?
Yeah, I mean, I think there's definitely more enthusiasm. I mean, it's probably the best regulatory environment we've ever been in for crypto and particularly Bitcoin, I think. But there's still some uncertainty as to exactly how the regulations are going to play out, and what is the U.S. Bitcoin reserve? How's that going to be structured? I mean, there was a we missed kind of the deadline on having that initial report out, I think a week ago or so. So, there's
Mhm.
still some apprehension as to until the ground gets really steady under people's feet on exactly how it's going to play out. That there's cautious optimism, I guess, but I think
Mhm.
we will get there. Clearly the ETFs have been very positive. If you look at the ownership of Bitcoin miners, the public miners out there, not just BitFufu, but across the board, it's dominated by a lot of these the crypto ETFs. You don't see a lot of the big long only Fidelities and of the world out there owning outside of index funds, owning a lot of the crypto assets. And I think part of that's been
Mhm.
from a regulatory standpoint as to how that's going to play out. And you certainly have seen some of the banks want to get involved in that either because they were kind of being hamstrung from getting involved in that. But that's starting to loosen up. I think it's a positive environment. We're pretty excited about the future for it.
Yeah, we are too. We are too. Something else that's not really totally related, but from the financing side, you guys having that cloud mining almost probably acts as a way for you to finance growth, by getting things, basically accelerate your earnings from mining, by doing the cloud mining. I still have not seen a lot of other, very attractive kind of financing opportunities for miners. Is there, I mean, for the small guys out here, I know the big guys like you have a lot more capability of probably securing funding, obviously being public, that definitely true. But where would you tell some of the smaller groups what kind of products to look for or groups to go talk to, for basically financing operations or financing growth?
Yeah, boy. Good, I mean, good question. I'm not sure I got a great answer for you. Unfortunately, I think I mean,
I'm asking
I get,
for a friend.
yeah, I get some, incoming, emails and calls from, various folks, some, some outside the US, some in looking at, wanting to do various, financing and leveraging out Bitcoin holdings and loans against BTC holdings. Um, but it seems a little fragmented, and I think, you're
Mhm.
starting to see you will start, and I think you see some more emerging players get larger on doing that. You'll probably see some of the smaller guys fall away to the wayside, unless it's a very niche type of business. So, I can't throw out a name or two, but I think they are out there. I mean, I think if you just go, you take a search and you look at who the major players are that are looking to fund, kind of the non-public companies out there. There are resources out there, and obviously it depends on every situation as to how you're structured, right? And
Mhm.
how profitable you are. It's going to make a difference. But I think it is, there's a lot of opportunity. I think there's probably been an increase in that activity picking up as Bitcoin's gotten a little more widespread and widely adopted.
Jake, you want to dive into AI? Because I want to ask you some AI questions next.
How are you guys thinking about it? I mean, obviously you've alluded to pay attention to this in the future if it's something you guys want to dive into. W- If the time isn't now, what are you guys waiting on?
But we got to buy more data centers first. We can't do the HPC if you don't have the heat in the data centers, right, from a lease basis. So that doesn't work. So that's what we're doing right now. It's kind of step one: go out and acquire the data center assets, so we've got that optionality. I think for and there's still some uncertainty as to how that's going to play out. I mean, it's obviously very capital intensive. Certainly from the capital intensity of Bitcoin data center, it's multiple times higher. And I think there's still uncertainty out there as to where's the demand going to come and what type of demand is it going to be, and are you going to be able to get the long term contracts and line those up or not? You know, there's a unicorn transaction that happens, probably never get repeated again, which is it's great, but that's the kind of one offer, I think. And so I think what we want to take, as we're acquiring these data centers and getting the infrastructure in place, we're going to see how this plays out over the next probably 9 or 12 months or so. And we have had people incoming to us that have wanted to explore discussions about using some capacity that we currently own for HPC
Mhm.
AI. Very preliminary there. And we're also in discussions. There are infrastructure funds out there that have experience doing it. I don't think you'll see us go out um, from a cold start, go to a greenfield HPC AI facility on our own, since we've never done it before. That's probably a recipe for disaster. So we'll partner up with someone who's got experience and who's done it before and can, kind of show us the ropes. I mean, that's kind of what we do with owning data centers, right? We were leased
Mhm.
asset light, leasing all the capacity. We didn't own any data centers, so we partnered up with some folks to see how they got run and started running them while we were leasing them, and got that experience. And then once we kind of understood the mechanics of it all, then we started going out and buying assets. So I think that, the HPCI probably follows a similar path to that.
Is
I
the
I
is
I
the
very
challenge
much
there just access to sites or access to capital, considering how capital intensive it is compared to Bitcoin mining?
I think the bigger thing for us right now is getting the sites.
Yeah.
I think the capital's out there to fund HPC AI. If there's a if you can demonstrate what the RI is going to be on that money, you'll get the funding for it, right? If it's a viable project or not. The question is, do you have the data centers to actually go and do that activity? And that's the bigger bottleneck, I think.
Yeah, I do think too that there's probably going to be we talked about this last show, Jake, too, but number of groups that are looking for high capacity and at different locations, especially in Texas, is tremendous. And like we mentioned earlier, there's just not a lot of opportunities where stuff's available quickly. I think there's going to be a bunch more of these AI groups going to groups like you guys that have lots of capacity under your belt or in your asset portfolio, and looking to basically either buy portions of that out or buy you outright. I I don't know what else they could do, and so I think in a way you're probably over the next 2 3 years we're going to see a lot of those transactions, like the Galaxy one with CoreWeave. I
Yeah.
really would not be surprised if we continue to see more and more of those in the space. So it's going to be interesting, and it's probably going to be the next path to people looking to monetize generation assets from AI stuff is go build a Bitcoin mine, secure a lot of capacity, go build a Bitcoin mine. Because a lot of these groups, there's a lot of people out there trying to put some greenfield stuff together and like package it up and sell it to some of these AI groups. It might be easier for them to just go buy a miner and retrofit everything and start building out their AI facilities. Because I also think, and I want to know what you think. There's rumors about a bill coming to Texas that is going to either require some on-site generation to offset the basically 100% uptime they need to run some of these AI facilities. So either requiring them to have some backup generation for off peak or for peak demand times where there might be some type of weather event or whatever, and the grid needs it. Because the whole narrative against Bitcoin mining has been basically you're stealing power from what is a higher priority need, which is residential commercial use. And so, you got these mines that are out there taking all this power. But we have seen, and it's been demonstrated in Texas, especially, that miners do actually stabilize the grid, and they're shutting
Yeah.
down when power's needed in other areas, and the market is dictating that. Um, AI is a whole different economic model. I mean, I think there's ranges of what the revenue they generate on a per megawatt hour is, and I've heard anywhere from $500 to $2,000 a megawatt hour, which is tremendous. But that's obviously they can afford to run basically always, and so I just do not think that that's going to be something that the political the politicians in the state of Texas are not going to go for that. When you got people that when you that will cause grid instability, in my opinion, and so I do think there's going to be in the future a lot of co-location of Bitcoin mining and AI, just because if you're going to have backup generation, you might as well be making money off of it. So yeah, I think that's the world we're going to be living in here before too long. But I think there's going to be a lot of groups like yourself that are going to probably make a lot of money just from owning some opportunities to have large scale power loads in their portfolio.
Yeah, I think that's correct, and it's part of the strategy is why we want to own those data centers and buy those assets and have that optionality down the road. And the other thing we're doing is looking at off grid opportunities, right?
Hmm.
Yeah, I'll give you an example. So we have a kind of a trial project going, and the partnership small, immaterial to the revenues of the company. But Colorado doesn't allow flaring of gas for oil drillers, and so if you can't flare the gas, you're not going to be able to drill. And so
Hmm.
we partnered up with someone there, who's a driller, and they needed to flare gas. And we said, look, take the flared gas and pump it to some gen sets, and have those gen sets power up miners. And so we'll go and supply the miners, and we'll take a profit share off of that. And
Hmm.
so we don't care what the electricity price doesn't matter to us, and the operation doesn't really matter. We're just taking it's a profit sharing for us. And so what
Hmm.
we can do is we can take older miners like an S19 that's not making a lot of money, but you put it there where you're not worrying about the cost of electricity, whether it's 4 cents or 8 cents or whatever, because you're flaring off the gas. Um, that it extends out the life of those miners that otherwise
Right.
you have to just get rid of.
Charlie, I
Um,
think you've been listening on my calls, man. I had this very discussion with a group today. I'm like, we
okay,
need to go buy this asset, and I don't care if it runs 60% of the time, even. We got free power. You just buy some old machines. It's the best ROI you find. Literally the best
yeah.
projects I've seen is this.
And you really you can't it's not easy to do with HPC either because you've gotta
Right.
have I mean, it's not as stable as, beyond
Right.
your electricity. You've gotta have some backup capacity if you wanna keep them running. But it works well for Bitcoin.
Yeah, it
You
does.
guys
It
you
does.
guys have sites in Ethiopia where I'm guessing that the power is really cheap. You've got the Oklahoma site. Let's just assume you had $1 billion today to deploy. How do you guys think about deploying that capital? What goes into that?
Well, I think, I mean, the ROI on the projects and we have a certain very set strict payback period for ROI on projects that we're looking at, and so it has to hit those metrics regardless of whether the money's there or not. But I think, let's assume that it does. We're, primarily looking I'd say the majority of what we're looking at is US based, but certainly there's other optionality outside the US globally. And we've, I mean, we're in Paraguay, we're in Ethiopia, we're in Indonesia, we're in Finland. So, we're already outside the US as it is. But I think, if we could take that and deploy it into data center assets, we would do that. Um, I suppose if we had $1 billion, that's a good chunk of money. So, we've got a framework agreement with Bitmain to acquire 80,000 miners over 2 years, at our option. So, certainly, I suppose in a scenario where there wasn't a data center available, and we couldn't use that capital, I guess we'd probably look at maybe refleeting some of the existing operations. But that's again, we're talking about purely theoretical stuff here because I don't have $1 billion in my pocket. So
Hey, I got a very serious question here. Who came up with the name BitFufu, and what's the story there?
yeah, no, it's interesting. It's the company's headquartered in Singapore. And if you look at in the language of the Fu means depending on how you want to interpret it, fortune or good fortune.
Uh,
And so the bit is obviously the Bitcoin, and the fufu is the fortune, right? So it's kind of good fortune with Bitcoin, if
I like it.
loosely translated.
Yeah, that's super cool.
Not
I
really
didn't
translated, but kind of putting it all together. Yeah.
Yeah, yeah, no, okay,
I
that's
thought it was gonna be
I
like
had no
Bitcoin
idea.
ninjas or something.
Yeah, right, I was like, "What?" I have no idea. I have no idea where they came from, so that yeah, that I like it. Nice. I had a company, called J Energy, and it was the letters were for me and my co-founder's kids, the initials for their first names. And turns out it also meant like victory in I can't remember what language it was, but I ended up always getting these guys from India that were like, "Oh man, Jay, we love your company. We love your company." And I was like, "I have no idea why." And then I looked at them. I was like, "Oh, this is why. They loved it." So yeah, man, that's
That's
great.
great.
It was like the good meaning behind names. So a name is
Yeah.
very important, but
Yeah. It could have
um
gone the other way, and then you'd been in trouble.
right, right. I know, I'm glad I put him in the JAI.
Yeah.
But yeah, so what are your guys you got growth ambitions, it sounds like a lot over this year, and I
Yeah.
can't remember if we said this before the show or during it, but around 7 to 800 megawatts you guys are looking to grow by the is that the end of this year or over the next 12 months?
So end of 25 target is 650 to 800 megawatts, and we're at
Okay.
566 as of end of April. And for exahash to be at 33 exahash by the end of 25, and we're at
Mhm.
again 28.3 as of end of April. And so I think what we've said previous to that, because we gave this guidance on our full year 24 call several weeks ago. We previous to that we said we wanted to add a gigawatt of capacity by the end of 2026.
Wow.
So that would be incremental. So if you look at what we had when we put that out there, that would put us somewhere in the neighborhood of 1.5 to 1.6 gigahertz.
Wow. Jeez.
Gigahertz,
Gigawatts. Yeah.
gigawatts. Sorry, yeah,
Yeah.
21 gigawatts.
yeah. So I
Yeah,
mean, a lot of
yeah.
capacity, and
Right.
we're certainly for a 2025 target. We're getting pretty close to that.
Mhm.
We're pretty confident we'll hit it. And then it's just a question of executing on the pipeline that we're looking at today, which again is 700 megawatts plus of a pipeline that we're looking at to
I
acquire.
think you need to look at some of those ones I got, man. We
Yeah,
got some good ones. We need to do some deals, BitFufu.
well,
We need to make some
we'll
money.
talk.
All right,
All
good.
right,
Yeah, man,
just
put
give me
me
a
in touch
call.
with the
We'll have a
yeah, we will. So,
we'll connect you up.
um, yeah,
Hearing you say
I'm
BitFufu in your Missouri accent is the funniest thing in the world.
I lived with a family from Cameroon, Africa, for about a year. I don't know if I even ever told you a story, Jake, but um the first meal I had with them was called fufu, and it was interesting. It looked like mashed potatoes, but it was like rice that was like mashed up, and you dip it in this kind of stew that they made. But yeah, when I heard bit fufu, I'm like, wow, interesting. Yeah, I haven't a fufu experience, but but yeah, this is you're I like the name. So look, man, I'm really appreciative of you guys coming on here, and I'm excited to watch you guys now. I really do think there's not enough out there about your name. Like
Yeah,
the name is one thing, but just your guys' story and your growth and the cloud mining aspect of it, that's very interesting. I do want to know more about that and kind of look into it more. I think that's you know, I literally just got off a call today with the mines that I'm a part of about utilizing our hash rate as collateral for different financing opportunities and things like that. I don't think we're in a position where we could start basically selling our hash rate to folks with uptime guarantees and all that, just because of the centralized nature of our limited amount of sites. So, but I do. That's interesting. It's a way to think about things going forward because it's obviously worked out for you guys, and there's a lot of miners out there in the public markets that are not profitable, or struggle, showing a profit. And the fact that you guys have been profitable every year is pretty impressive. And and
Yeah. Well, thanks.
remarkable in and of itself. So, yeah, man, like I'm excited to get to watch you guys more and talk with you guys more, and hopefully we could do some deals together.
Yeah, no, that'd be great. Thanks for having us on, and we'll be obviously be out to Bitcoin 2025 in Las Vegas in a few weeks here. We're a sponsor there. Gonna have a booth. I'm doing a panel discussion, one of the panels on one of the days there. So just getting the word out to folks and let them understand what the story is and what the growth story is for the company because we think it's pretty strong.
Yeah, no, we'll have to meet when we're out there. Me and Jake will both be out there.
Oh, great! Yeah, let's do that.
Yeah, so yeah, man. Look, thank you for coming on, and yeah, we look forward to meeting you in Vegas.
That sounds great. Thanks, guys. Have a good weekend.
You too.